Some crazy DD I'm about to go through here today, absolutely crazy. It can be described simply as the hedge fund's infinite money glitch. This is mad stuff. But before we get into that, I just want to say thanks for watching. Give a like on the video, helps me out, and I'll keep on bringing great GameStop related content and finding the best DD across anywhere I can see it on the internet. So this is what I'm bringing you today. But before we get anything, quickly go into the price. You can see it's currently at $177.96 a share. Market is still open at the time of recording, and if we just go to the day price, you can see that it's been all over the place. Highs of 181, lows of 173, and it's actually got some pretty good movement towards the back end of the day, so hopefully this can go up. But as we can see from here, the line of support is still holding on the on this line here with the February, March, back end of March, May, and now July. So this line of support is looking pretty good. But we're not here to talk about the price today. We're talking about the hedge fund's infinite money glitch. So let's get into this. And this is by a user called Cryand. And the title of the post is Visual of the SFT trades to prevent shorts or naked shorts from becoming reported FTDs. And that is failure to deliver. SFTs are a big puzzle piece on how stocks can be abused by naked shorting, brought to light by the new DTC 2021-010 filing. So let's get straight into this. But before we get into that, what is an SFT trade? Well, an SFT is a securities financing transaction, and this allows investment firms to use assets such as their shares or bonds they own to secure funding for their activities. A securities financing transaction can be a repurchase transaction, selling a security and agreeing to repurchase it in the future for the original sum of money plus a return for that. The lending of a security for a fee in return in the form of financial instruments or cash given by the borrower, a buy-sell-back transaction or a sell-buyback transaction, and a margin lending transaction. So they are kind of the summaries of what an STF trade is, but we'll be going through that again. And in terms of the DTC 2021-010 filing, this is this document here, 350 pages of very detailed, very technical language, and this Reddit user has gone through this and summed it up in a very nice diagram. So we won't have to go through it today. You can go through it. The link will be in the description as always, but we're going to go through this. Now he wants to draw attention to this particular section in the document, which is SFTs involve the owners of security transferring those securities temporarily to a borrower, typically a hedge fund. And then the next highlight part, in return for these lent securities, the borrower transfers collateral and a net rate payment is typically transferred to either the lender or the borrower that reflects the liquidity of lent securities as well as interest on cash collateral. The NSCC understands that SFTs provide liquidity to the markets and facilitates the ability of market participants to make delivery on short sales, thereby avoiding failures to deliver naked shorts and other situations. On a business day, the DTC and SS affiliate processes deliver orders to security lending transactions on securities having an approximate value of 150 billion. So that is a massive amount of cash that happens on the day. That is a typical business day. So non-typical would probably be what we're seeing right now in GME and AMC. So we'll be going through this chart here at a very high level and try and touch upon some of the finer points that have been mentioned. And let's just see here. So this kind of goes through the flow, and this is the entire cycle. So we have the counterparty lender, the borrowers, the markets, and what happens here. So as you can see here, there's a pool of shares to loan the STF, and these shares can be borrowed to fake out covering on previous shorts becoming failure to deliver, and this can be performed ad infinitum or as many times as you want. These shares are borrowed to cover the short positions, and what happens here on the collateral is then swap for shares, but the next day they swap back. So this is just a little loop, a closed loop, where that they can swap the shares back and forth and there's no problems. Then obviously on the naked shorting side, these are shorted, the buy is found, the shares are located, no. Okay, what would happen? Well, then this would be reported. But because of what they are actually doing, the shorts and naked shorts are on the balance sheet, and then they can repeat this again. So what happens down at this level? Well, the buy rights is necessary to bring the FTDs back underwater, and they continue to perform STFs to avoid any further failure delivers. Hidden shorts and naked shorts are not subject to the regulations and held by on the balance sheet. So this is how it's done. The market is checking the reg shows, and this is on the balance sheet. Well, it's not. It's not on the balance sheet. So the majority of open positions and short positions are held as liabilities and never reported to as FTDs because of the SFT trades. They fake out delivery prior to T+2 continually to avoid the short positions becoming failures. The SFT trades is the best possible explanation as how the stock can be abused by naked shorting. Their shorts and naked shorts must not be allowed to fall or they persist to deliver. Otherwise, they'll be forced to close out their short position. So the fact they're doing this almost hides it from the regulatory bodies. And as a final thing, well, this is what I went through before. The securities financing transaction is a transaction between the borrower and the lender when a borrower is in need of shares for a short period of time, typically overnight. The borrower will give collateral to the lender will give the shares to the borrower, the next day they swap back. By performing this trade, the borrower can cover a short or naked short position prior to the T+2 to avoid failure to deliver and resetting a clock. The same short position or naked short position the same short or naked short positions locate clock would be reset and would be subject to the T+2 failure. So these STF trades would need to be formed continuously to keep shorts or naked shorts from showing up as a failure to deliver. These shorts or naked shorts are still held as liabilities on their balance sheets and not subject to net capital gains requirements. And as per the NSCC 21010 document, then this is defined as therefore avoid failure to deliver and naked shorts in similar positions. So in a very quick summary, the short and hedge fund gets collateral, they send the collateral for the counterparty for shares, they fake out the delivery of a short position, resetting the T2 so it doesn't count as a failure. Then the short and hedge fund then sends the shares back to the counterparty, gets the collateral, and you keep on repeating and repeating and repeating. So there is potentially a massive amount of shorts and naked shorts behind the scenes. They're not affected by these regulations, and we are just seeing the peak of the iceberg or the tip of the iceberg because we are looking into it in GameStop. So that is kind of a very quick summary of what it is. But yes, it can be described as a infinite money glitch because the clearinghouse doesn't know the difference between an actual share and the market makers once it's proved into existence, and then the market maker doesn't know the difference anyway because they haven't been finalized, so it's hidden from everyone. It's just be recycling, and in this time that the hedge funds are just making money hand over fist because they keep on shorting the shares and then to have a net loss with this movement here. And if the stock, for example, GameStop in a different universe went to zero, they would have made money hand over fist the entire time. It would have went to zero and everything's fine. Nobody knows. The secret continues. So absolutely crazy news here. Crazy news. The infinite money glitch has potentially been exposed by this user, and honestly, it looks like a pretty cut and dry case. So yeah, guys, thanks for watching. Please leave a like on the video if you enjoyed it. Check out the article or check out the Reddit post by this user. Give it a thumbs up. Honestly, it's some excellent stuff. Right, guys, thanks for watching, and I'll catch you guys next time.